Is the most unloved ASX sector set for the biggest rebound we've seen in decades? The answer will have massive implications to your portfolio, so get ready as we break it all down, plus give you stocks that could be the best reversal stories seen all year. With insight from our government-accredited share trading education, which has our experts regularly called upon by major media Australia-wide, I am Philip Tortevsky, joined by senior analyst Janine Cox and Pedro Banales, and we are Wealth Within. Good evening.
Good evening.
Nice.
Should be a bit of fun tonight.
Yes.
Some interesting topics.
It is always nice to find some unloved areas of the market that could absolutely explode. But thank you for joining also. Pedro, welcome.
My pleasure, guys. It's time to pick some bottoms tonight. And yes, I'm talking about stocks.
Oh.
Well, I'm glad you clarified that, mate. But all right, let's dive right in. Now, what is the most unloved sector that is shaping up for something big, Janine? I'm going to ask you.
Now, this may surprise a lot of people if you're following the market, and if people have been following yours and Pedro's podcast, and I hope you have a look at this. On your screen right now, we have a table, and this is showing the sectors. This is the yearly return at the moment, and we're seeing consumer staples at the top, and we drill right down to the bottom. Healthcare. It's all about healthcare, isn't it? And we've seen the US healthcare sector take off, and ours usually follows.
Yep, so you're saying that is the dark horse to...
Looks like it.
Yep, we're going to dive right into that. All right, this is exciting. Now, before we get into some stocks, like Janine mentioned, check this chart out, which shows some forecasts from the big end of town about the future of the healthcare industry. Now, according to analysts from the Simply Wall Street, the forecast annual earnings growth for the sector is set to be almost 25% for the next 5 years, higher than any of its peers. Add on top that it is now currently trading well below its average 5-year PE median ratio, and the fundamental case starts to build for the potential of a massive turnaround. But are there any other factors or drivers investors need to be aware of with the healthcare sector right now, Pedro, that could affect their future growth, mate? I'm going to ask you on this one because there is also the macro story going on with healthcare around the world.
Oh, absolutely. I mean, the baby boomers are aging into retirement, and we've still yet to see that last cohort of the baby boomers moving into retirement. And we're having more and more moving above that 65-year-old age. And check out these statistics, right? So the projected rise is from 4.3 million in 2021 to 6.7 million in 2041. So that's an increase of more than 50%. Also, we have Australians aged 85 and over, which are expected to double over 1 million by 2042. So this allows a long runway for the healthcare sector to really thrive for the next 10, 20 years.
Yeah, fantastic. All right. Well, that's going to mean a lot of those extra parkings that you get when you become a pensioner, right? We haven't got enough on our streets for that.
I don't know where his mind is right now, but my mind definitely doesn't go that far. Thank you for that.
Can we get into some stocks?
Yes, please. Before I start crying. All right, now we're looking at CSL, which is the first one on the list. You can see there it's come off a bottom, which is really exciting. And look at that weekly chart. You'll notice that volume is been rising into that low and still rising and high on the exit from it, which is really good to see. Could be a few short coverings there as they unwind their positions, which is nice to see a bounce. And that's why we don't go in right off those bottoms. We just wait for the stock or market to test itself first. But it's come back to the level that we've all said that it would. You know, we've talked about it. You guys have talked about it on your podcast before. We've talked about it on the show. It's almost done, but we can't look a gift horse in the mouth right now. The key is to wait for that retest of the low, which we haven't seen yet, but we're going to be updating you on further shows about these stocks. So you've really got to stay tuned and up to date with what's going on to get the best opportunities. But I mean, just looking at what the potential upside could be, if we can see up here around 180, I would say is a potential for CSL. And I'm just going to grab my tool there so I can, if it behaves itself. And it's up around 50% is a potential from that point there. So a pullback down to closer to $105 would be a really nice little move, and a push up from that I'd like to see. We can look at the left-hand side of the chart and see around $117 or $120 could provide a little bit of short-term resistance for CSL, and just keep an eye on that.
Yeah, it's interesting because I remember, even going out in mainstream saying $100, $100, that's a big psychological level. The big question for me for CSL, I want to get both your thoughts. First, you, Janine, is this move different? Because we have been in a big downtrend. We've seen upticks in the past over the last couple of years. Does this one feel different, or does it look different from what you're seeing?
Yeah, and I mean, it comes back to what we teach students in our course, which is price, pattern and time. Having all of those things lined up increases your probability of these major turns providing the best opportunities. So, and looking at it right now, it's looking pretty good.
Awesome. Pedro, your thoughts quickly on CSL before we move on to the next one. Does this move feel a little different what we're seeing at these lows?
Well, it definitely seems like some type of reversal is happening and some value type buying at the moment. I mean, I've never seen CSL with those fundamentals like we're seeing now. I think it's at around that 25 times PE ratio, which is, for this, it was always trading at higher multiples of earnings throughout its whole, this period here for the last 10 years. So that $92 level was very strong, and you can just go back to 2006 to see that. I think that we are seeing a nice little reversal. I'd like to see it come up and retest that high of 175 before we are sure that it is taking off. But there's a good opportunity for a short-term trade, I think, coming up.
Fantastic. Now, if you do want to get an insight into some of the things you are seeing tonight, please check this book out, How to Beat the Managed Funds by 20%. It is free, you just have to pay the shipping. It's from Dale Gillham. The link is in the description in this video below. As always, if you want to take things to the next level, go and visit the website. Check out our Diploma of Share Trading and Investment. It is government accredited. You will not find that anywhere else. And please go and take a look at some of the testimonials to see what our clients are doing. The testimonials are up to date. Even recent examples are absolutely amazing. They're nailing their trading at the moment, which is awesome. But our next stock is another opportunity. Really
interesting, Ramsay Healthcare.
All right.
Now, this stock actually has fallen to a level that, I mean, it's $30 is what it hit in November, which is quite incredible to think. But, there are a number of levels that this stock has hit and tried to recover. So we saw one in September 2022. We saw another one here in August 2023. And what happens is sometimes traders will take a position on a stock, get stopped out, and then they'll leave the stock and never go back to it again, which is really tragic because eventually that fall, if it's a big quality stock, it's going to find its bottom and then turn around again. And it's a matter of being there, isn't it, when that happens, which, we're seeing this move out of Ramsay. That's a really nice level of support. And look at the strength that we've seen this month in the share price.
Yeah, I think what you said is very important and underrated because that, to me, all comes down to structure. If you have a solid structure, you're always able to pull the trigger again because you've done the work, you've got the plan, you've got the model, or whatever your strategy is, and you know that, okay, not every time is going to be perfect in terms of entry, but if I follow my model that is structured, I will get the opportunity and make the most out of it. And I think that's the biggest thing. If you're attacking the market willy-nilly and saying, well, I like it, it's cheap, without any structure, you miss the next run.
Yeah, look, and I was spying on you this week because I was...
Well, yeah. Hopefully with
because okay.
I'm not going to go there.
But you were actually mentoring someone.
Oh, yeah.
And you were talking about exactly that. So, it's true. And it just the penny drops when people actually see what you're talking about.
Well, when you can measure risk and reward, right? I mean, on that chart, if you can really quantify risk and reward opportunities, take the opportunities with the higher reward, and measure that and say, okay, well, in the Ramsay Healthcare situation, let's just say around these lows, you're looking for an entry. You get one, you get stopped out, but the target to where the stock's likely to get to for your opportunity.
So the opportunity's still there, so stick with it.
Well, yeah, and if the opportunity's 3 or 4 or 5 times your risk, that affords you 2 or 3 goes at that level.
Yeah.
And you still become profitable. But how do you know that unless you know how to measure it?
Yep.
And these are the things we teach. So please, if you're interested in what I'm talking about, go and check it out because this structure that I'm talking about is one of the most important things you need to know as a trader because that's really all you can control. When you get in, when you get out, what the opportunity looks like, and if it makes sense in terms of the risk versus reward, that's going to keep you profitable more often than not. But
are you willing to take on another round of mentors?
Yeah, why not?
mentorees.
Yeah, better than watching Netflix. I spend enough time at home watching Netflix.
Well, there you go. You've had that opportunity. If you heard it, if you're looking for a mentor, you better call.
Not too many though, please. I do like it, but
All right.
With Ramsey, I think I want to ask this question to you as well, and Pedro. Compared to CSL, to me, this looks different.
It does look different because it looks like it's way further ahead in that whole move than what CSL is. I mean, CSL hasn't really sort of tested the bottom on the way down, whereas if you look at Ramsey, I'll just enlarge this because I know what I'm looking at, but if I don't enlarge it for you guys, you may not see it, you may miss it because it's just such a small move. You know, it's had this bounce off the bottom, which is the first thing, tick, you know, and then it's had another bounce to test the low and it is turning back up again. The students of our courses will all know what this looks like and what it means and how far, you know, why I'm saying that there's probably 23% or at least 20% upside on this trade, possibly more, and where that could go to because of it. And once you've got those lines that you can draw on the chart and you know it's probably going to go to at least those levels, then like Phil says, then it's just a question of weighing up the risk to reward and choosing the exact entry.
And I know some people say, you know, on this show, why don't you, you know, often say buy here or sell there. And the reality is because tomorrow we may get new information on this stock that completely changes the view, but we're not going to be here to tell you or to update that view so that, you know, you may be thinking, oh, you said buy, but things have changed and now we're thinking sell and we haven't been able to show you. And so that's where things get mixed up. And that's the reality of trading and markets, because if Ramsey pulls back down and takes out that recent low, that invalidates a big thesis right now. So,
I mean, the great thing about having the education is that people can better follow what you're talking about.
Yeah, for sure.
You know, and why would you want to be a beggar of fish when you can be the fisherman or woman?
Yeah, that's a nice
I had
analogy.
to say woman.
Yeah. I'm not much of a fisherman myself, but look, let's get into the next stock. Pedro, what have you got?
Next one we have is Sonic Healthcare, another beautiful looking one. Not quite as advanced in its move as Ramsey, but still starting to show signs of recovery. So let's expand out the monthly chart and let's have a look all the way back to you know, its inception in 1996. This stock has just been making strides ever since. It really has just been a growth story. You know, let's have a look all the way from down there to the all-time high. It had 6,000%. I mean, who needs, you know, all these fancy meme stocks when you can have a nice, healthy company like this in your portfolio? Right now, you know, it has come down a little bit. Let's measure from the top how much it has retraced. It's retraced about that 60%. So when we go back to these previous periods, we can see that back there it retraced 45%. And back here in 2000, it retraced about that 51%. So now it has extended a little bit longer than usual in price and time. So I do think that now it is due for a bit of a bounce. And have a look at this line over here, and I'll outline it a little bit better for people to see with the actual price. And I'm talking about that $18 level, roughly around there. That has been such an important level for this stock. And for other reasons as well, when you look at the whole ranges and all of its movement, I would recommend this stock for anybody that's wanting to learn, any of our students that want to apply what they're learning in the modules right now, because this offers a plethora of you know, cycles and uptrends and downtrends and so on. But that $18 level, very important. We're still yet to see it break above that downward momentum. But once it does, I do believe that we will see a similar move to what we saw out of this low, the GFC low here, where we saw that sustained up move. So at the moment, early days, if we look at the weekly chart, expand that out to see if there's any signs, early signs of something happening. Well, we've got high volume right now. It's sustained, but it's not really spiking on this up move. It's probably coming back to fill that gap here at least to that $28 to $23. We'll see what happens, whether it comes back down as a bit of a consolidation and then moves up. Still early days, but I really do like this one. Fundamentals are lining up as well. So I definitely want to watch.
Awesome. All right, Janine, next one.
All right, this is the last one for this part.
For this section, there's...
How many more?
The next more...
4 more?
The great English there. The next more are going to be amazing, so stay tuned for them. But
The next round.
The next
Well,
round,
Telix Pharmaceuticals. Oh my goodness, this is so interesting, this stock. I've got people writing into me about this one all the time. Some of the students and some of the people that I'm mentoring at the moment are working on this one. Now, recently what's really interesting about it is it's come back and tested support here in June, on the first week of June, and then since then it's been rising up nicely to take out that peak there, which is a really nice sign. At this point here, what have we got on the longer term chart? You can see that it's actually come back to a really important level, and the trend is actually so far intact. You know, it's held that line.
I was going to say that if all you did was get this book right here before looking at this chart, you would have had the skills to pick that low at $10, just saying.
Beautiful.
Yep.
And then looking at the way that it's come down, it's actually, pulled back and reversed, and you can see it really clearly on that monthly chart. I would just like to see it actually trade up in the following month. So we're obviously at the end of June now. I'd like to see a move up. It could consolidate a little bit sideways, could even come back a little bit further, but at the moment, it's all about, like Phil said, it's all about the risk to reward and how far we can see it going up from here. And like the other stocks, there's probably 30% in it in the short term and possibly more. If we go back to Sonic, the same thing's true. We can see, and often they will all rise the same sort of amount. You know, it can be that there's probably 15, there's around 30, so it's possibly 20 or 30 there. We saw Ramsey with a 23% to that level. So it's in the ballpark anyway of where it could run to. It's just a question of, whether it's going to do it all now, and that's what you've got to be prepared for.
Yeah, which is great. I mean, when you can find these...
Yeah, it's a smaller one, so therefore you've got to expect a bit more volatility on it, don't you?
Yeah, awesome. All right, now stick around because we have more amazing stocks coming up shortly, but now time for our trending topic this week, Janine.
All right, yes, and many investors are uncertain about where to put their money as the tone is becoming increasingly defensive. If right now the ASX hottest trade isn't mining or banks, what is it? Could it be stocks like Coles or Woolworths? We will get into that shortly, but first, banks have come off the boil as hedge funds increased short positions on our big four. Makes you wonder where they got access to the stock. Major banks have fallen around 20% and there have been calls for further falls. Headlines may help their cause temporarily. Aussie bank shares in catastrophic collapse. One of Australia's banks has suffered a catastrophic collapse, wiping off millions. Millions? Now let's put that in perspective, shall we? CBA alone is valued at around $277 billion. So it was a small bank, Judo Bank, whose stock suffered a huge hit when it announced unexpected business loans from a few companies in different sectors. Judo holds around 1% of Australian business lending. Just reading headlines can be dangerous, and fear plays into the hands of these hedge funds. On the mining front, our big miners BHP and Rio are trading close to all-time highs, down by around 10%. Keep your eye on those also. But while we wait patiently for the next opportunity in banks and miners, could Woolies and Coles be the hottest opportunities right now? Woolies and Coles are surging, outperforming the broader market, and the article warns anyone tempted to chase it. So let's take a look at where the money is flowing, shall we?
Anytime you see a headline saying stay away, you should go in, shouldn't you?
Yeah, well, see, that article had a bit of both.
Okay.
It was just to add to the confusion for people.
There they cover their tracks.
Yeah, so let's have a look at this, shall we? All right, on Coles Group, it looks really nice, absolutely stunning move that we've seen on Coles. And, how far could it go? That's the big question right now. If you're already in the stock, then you'll be pretty happy about that. Short term, we could see a little bit of consolidation still to play out as the high's been just recently broken, and that's normal. You'll notice that Coles typically has a run for probably a month and a half or 2 months, and then it runs out of steam and then pulls back again, consolidates a bit, and then off it goes again. So where do I expect that Coles could run from here? Well, it could be up around the $28, $29 mark as a possibility, but I would say at least 26, 27 in the short term, and then a further move up to the high closer to $30 for Coles. Now, does that mean that you should be, cautious right now? I would say when a stock makes a break to a new all-time high, it's a really good sign of strength for the stock. It could be that the activists are out there, those with vested interests trying to get more interest in the stock so that it just pumps up their profits. So that's something to be mindful of. But look, quite often stocks will go through these highs, they'll pull back a little bit and then they'll take off again. So I'm quite happy with the way that Coles is unfolding at the moment and produces a dividend as well for those who are looking for that. Woolies, a different story on Woolies. It's been an absolute stellar stock. We've seen big moves up in the share price. Now, I'd probably be a little bit cautious about this. We've got a gap here that's unfolded as the stock's risen up strongly. I am expecting a pullback on Woolies in the short term, but it could actually test that high, the all-time high in August 2021, before the pullback actually occurs. And beyond that, I would expect it to break to a new all-time high and head towards 44 to 46 in the short term, and then a $50 price tag on Woolies down the track.
Fantastic. They both look absolutely...
But they're not massive gainers, we're not talking about mining stocks. Banks will beat them at most times, but I mean, most of the run in the short term has happened right now, given where Woolies is close to that high. We've seen it break through, but there is further upside. So for those who are willing to hold on for medium term, then, I think they're good stocks to have in a portfolio and underpin it.
Yeah, I totally agree. I think the best opportunity you might have missed for the short-term trade or the good risk reward. But
well, you just have a look at what the history shows, and I mean as to where that is, because after these long runs, there's a bit of consolidation on the stock, and then eventually it takes off and makes a move up. But once it starts getting up to lofty heights, it pulls back and then it doesn't go on for too much longer. We saw that happen here. So it's just a question of how much further it's going to run for. So just be patient with it.
Yep, be patient and nimble with those two stocks. Great advice. Now, if you want the skills to analyse stocks just like you've seen tonight, visit our website, wealthwithin.com.au. But let's get back to our topic and get into some more stocks. Pedro, what have you got?
All right, next up we have Ansell, another healthcare play. Let's get into the chart and have a look, because this one has been a marvellous growth story since 2001. This stock has just been consistently rising. Let's expand out the monthly. Now, what I've done is I've put a momentum line here underneath those troughs, and we can see that since that 2001 low, it is up around that 702%. Right now, it's trading around that previous all-time high, where it really struggled to get through many times during 1987. And you can see just how old this stock is, how long it's been on the market. And 1994, that was a strong level, that $28, $29 level. Even around 2015, again 2018, and 2023. So it goes to show how much the stock memory is when it comes to those levels. And this is why you've got such an advantage when you know how to read a chart. You can have a look. I mean, that would have been great information back here in 2015 and 2016, because the stock actually was rejected from there. And right now it's trading at that $32. So I'm glad that it is above it. That has been a very difficult level. But as we know, it's kind of like being underneath water or being above the water. Once you're above it, it can come down, and you can actually, the price could actually bounce from that level and then, find some support and then possibly trade back up. So right now, I do like that it is above it. It looks like it's heading to maybe test that level here at around $37, which represents around that 16% upside. And to that support level, we've got 10%. So going back to that risk and reward ratio, you have to see whether that's there. Obviously, there's no clear entry at the moment. It's just been going up and up and up. It does seem a little bit extended. It looks like it's due for a bit of a pullback. So you might want to wait a little bit if you are looking to get in it. But it does produce these constant opportunities to get back in. It is a nice little trading stock if you know what you're doing. So I do quite like it. Right now, just a little bit overextended. I'd like to see it come back, retest that previous level that I was talking about, at least test at $29 and then see it take off again. Even if it dipped down a little bit more and tested that momentum, that would be fine as well. But for me right now, this is a watch and possibly a further run up to that $37.
Awesome. I'll tell you what, these healthcare plays are a bit more far gone to the turn than you would expect, or some would expect.
Progressed. Some of them have progressed, yeah.
Yeah.
And here's another interesting one.
What have you got?
This one's so interesting, and reason being is because I was talking to one of the people I'm mentoring this week about it, and he'd done some analysis. So let's take a look. So what he'd identified is a particular pattern in this stock going up, and it's quite beautiful the way that it had unfolded. So those of you who have done our advanced course will have seen that one, and I'm actually going to go to the daily chart, which we don't often do, but it's interesting to look at the volatility of the stock and see how it's moved, and just this incredible pattern that's unfolding right now on this move here. Now it's broken out of there, but you could also draw across these tops here and see how it's unfolding there as well. But what was surprised us is, as we were having a chat about this on Friday, it actually dropped 11% right back to where we expected it to drop. And now it's trying to reverse back up through those levels. But it's just so amazing. And I think that, he was even blown away himself at how, even on a stock like this, these patterns and the things that we teach at work, at play and working.
It's one of the nicest feelings in the world, I think, when you think something's going to happen on a stock and it does, and you feel like the master of the universe for a minute.
For a minute, I love that you said that. Yeah, look at this. Yeah, well, we can see there's some serious resistance across here. You can see that on the short-term time frame, with the potential for upside. So we have to look at both upside and downside risk. But I mean, potential for it to go back to that high is 69% upside. But like the other ones, 20, 30%, you might get a little bit more volatility out of the smaller stocks, but then the challenge to get out of them at a decent price can be there as well. So that's just to bear that in mind.
I mean, just your thoughts a bit more on the way it's unfolding right now, because you mentioned it on the way up, it does extend. But are you liking what's happening now? Because it really, to me, doesn't look like it's blown off yet.
It hasn't, yeah. So I like that. There is a little bit of resistance around here, which is what it's experiencing right now. But if we can actually see the finish of this move where it's testing this bottom, this low here, I'll expand it out. The risk right now, there's two sides to this, because the risk right now is that it's hit that level and then it comes back and finishes down here somewhere. That's the risk with it in the short term. But if it keeps pushing up to these highs here, then it could just shoot off, like you say.
Time will tell very soon.
But it's a good trading stock.
Yeah, all right. So watch that one closely. Let's get to the next one. Pedro, what have you got?
All right, next we have CUV, and this is Klein-Uvel Pharmaceuticals. This one is one that is a little bit of a catch a falling knife scenario. However, it's showing early signs of a reversal. So let's expand out the monthly chart here. Let's go all the way back. So a lot of these have actually been on our market for a very long time. This is why I do like the healthcare sector. They're well-established businesses, already making, having revenue. You don't need to worry about them delisting on the stock exchange. You don't need to worry about them going under. Nice, strong companies that have been around for a long time. Same with this one. And there has been some very strong support and resistance around that $9. You can see back here in 2016. And just if I zoom into the monthly chart, that outside bar there in 2007 hit some resistance. And then there was a little bit of price agreements in 2004 as well, around that $9. So what's happened now, it's actually bounced off that level. This is such a textbook pattern type of analysis type stock. And I'm sure our students will be looking at this and recognizing multiple patterns that have unfolded during its lifetime. And the patterns are doing exactly what the pattern should do. That's another thing. When you see a pattern unfolding, and it actually reverses the stock as it should, that gives you such confirmation that either it'll happen again on this stock or in other stocks that you're looking at. So at the moment, there is this momentum down here. So if I just exclude these spikes that we saw back here and just focus on this kind of momentum price agreements, it hasn't broken above it, but price is compressing now against the $9 and against that momentum. So whether that breaks to the upside or the downside, we're still yet to see. Let's have a look at the weekly chart to see if we see any indication. And this is why putting it all together is so powerful, learning all of the techniques. And that's exactly what we teach in the modules. We build upon the skills as we go along. And when you're learning about bar analysis, volume analysis is so important as it goes with it. Right now, we did see some spike in volume on this up move. It has continued to move up. Right now, it's not moving up too abruptly, but this is exactly why this is the best time to be looking at it, because it hasn't run yet. But there's some indication telling you that, hey, have a look at it because something looks like it's about to happen. So all in all, I think that this one, early signs, much like we saw with Sonic, but definitely another one to keep on the watch list.
Yeah, awesome. All right, now we've got the hot stock tip coming up soon, and I think that's the best of the bunch.
Do you?
I'm going to give it away. I hope I don't give up too much away, but I'm really liking that one coming up soon. You've got the last one in this healthcare space.
All right. I don't know if that's a good thing.
I think it is.
All right, let's have a look. Okay, so put a trend line down here. We can see that it looks like Nanosonics is actually on the other side of it. It's come back and test that. But this is the challenge with analysis and trading, because that could actually prove to be resistance for it. It's too early to say. It's a nice retest of that low coming in, but it would have to do a lot for me to get really excited about this one. And because there's some strong resistance around this level here, I'd really like to see it get above that before considering an opportunity in it. Now, short-term traders might try to trade the bottom out of it, but that's the highest risk point to be in.
Yeah. Now, before we move on, let's get to the favourites, Janine.
All right. Favourite would have to be Ramsay at the moment. I like Ramsay given it's turned a corner. I also like Telix if it manages to hold up for the next week above that high there.
Yep.
Just on the basis that this one's probably got more potential in it. Stop loss is a real consideration though with it.
Yeah, awesome advice. All right, Pedro, what's your favourite?
Look, my favorite would have to be Telix. Also, that's looking beautiful. I love that retracement. But if I had to pick another one, since Janine got another one as well, I'm going to go with Sonic. Even though it hasn't, confirmed anything yet, I think that this one is looking quite nice.
Awesome. All right, now moving on. As mentioned, we're going to get into our hot stock tip shortly. But first, let's answer your questions. Barry writes, been watching CXU for a while. It has a history of spiking on uranium price speculation. I had planned to buy if it breaks 7 cents, but it shot straight through it. In that day, I did put a buy at 0.72 and its intraday pulled back to 73 cents and shot up again. The next day, it ran another 15 to 20%. I'm now waiting for it to cool off. Where would you enter? How do I find an entry without FOMO? In or missing it again? Now, the best way to answer to this is go and visit the website and go and do the course, because that is exactly the question we answer, and that you'll know when you finish studying with us. You will not have those questions on when do you buy. But to answer the question here, Janine, I know perfect person to deal with this area of the market, nuclear.
You know, this is my favourite. Okay, let's go and have a look, shall we? All right, you can see that there is a natural level across here. So there's the first thing. It's actually tick for me because it's broken through that level. So that's one. The fact that it shot away from your entry. Now, this is the thing. If you're trading these type of stocks and you're trying to be perfect about the entry, forget it. You're just not going to. I mean, you have to think about what the strategy is and really, really examine it closely, and following how it's unfolded in the past is a really important way of doing it. But looking at it from a long-term perspective, the fact that it's broken that level is as good as any, and often it may be just a question of waiting for the pullback to test that support level to give you an opportunity to get in. That's what I'd say. The other side of this is if you are willing to buy it at 70 cents and your upside potential, let me have a look at the monthly chart so we can actually work out what that's going to be. But if we were looking at 70 cents, which is down here, you're right on that line, of all of these peaks that are there. But if you did, where were you expecting it to go? That's the question. I mean, there is a real possibility for this stock to get up to 230 quite easily. It could be somewhere around, 23, 17 cents, 18 cents, but there's a really strong level there. You need to have an understanding of what that upside and that risk reward is. If you were going to get in at 70 cents or thereabouts, that's not even through that high. So, I think there's an issue here with the understanding when a small stock that's low liquidity, what is it going to do? And I was having a conversation with some people I was mentoring this week, because what happens is people do the absolute best when they're trained to prepare for the trade in terms of this, making sure they've got a setup, doing their analysis and their back testing, which is great. But when you're going through it, you've also got to manage your thought process around it, not just, the physical trade itself and your risk and reward. It's got to be the things that you tell yourself. So once the stock's gone through your level and it's whipped through, there's got to be some statements that you can read to yourself, a pre-planned preparation, especially for a stock like this.
Especially because it's going to move fast. And I think that's the other question for me. I mean, if that stock gapped up on the day, and he couldn't get in at the price he wanted, that's another story. But if it didn't and it went through his level, how
much higher was he prepared to buy it at? Like, was it you're prepared to go another 10%, 20% above? What is it?
And I think the other thing to really think about if you're looking at it professionally is, are you looking at the volume? Are you looking at the market depth? Are you really seeing, is the amount of shares I'm trying to get there? Am I putting in orders, conditional pre-orders in the market where I can actually get filled and know how to do that correctly? Because to me, unless it's gapped above, there's no reason why you shouldn't have got it at that price. You just haven't executed properly. And that's, I think, the big consideration. Again, things that we do teach. So hopefully that helps answer your question, but thank you for sending it through. Adam's email is next. Been holding GCM Corp for the last year or so. I like the market it's trying to get into with its VHD graphite after tests, showing it outperforms any other cooling methods for applications within AI data centers. Now, just wondering if you think it might be due for a run soon and if you could have a look at the chart. All right, Pedro, GCM, I believe.
Right, I haven't seen this stock before. I'm having a look at it now. It looks quite illiquid. It looks like one of those typical specky type stocks. Now, you mentioned, all of the reasons why you wanted or why you like this stock, right? But I didn't hear one technical reason in there, and I think that is a key kind of thing to highlight, because you really need to. Are you looking to hold this stock long term? Are you looking to trade it? What exactly are you trying to do? Remember that when you buy something, you want to extract some profit from it, right? It's fair enough if it's got the whole story behind it, but you need to be able to eke out profit when it does run. And the only way to do that is to know the technicals and when to exactly buy. You've got it could be the best material out there to cool data centers, but if there's no investor interest, if there's no trader interest in it, then it's not going to move. And right now, this is not telling me that there's any interest in it, apart from some spikes, maybe some pump and dumps that have been happening with it. And the fact that it's actually traded below this level at around that 1 cent is a little bit of a concern. Yes, it did dip below it in 2020, it dipped below it in 2024, and now it's moving back towards that level. And you've got some resistance at around that 2 cents as well. Look, it's a 1 to 2 cent stock here. What I'd like to know what your level of expertise is in the market, because if you say that you're not using technicals and your level of expertise is kind of beginner to intermediate, I would say that this is not a stock that you should be trading or even looking at. It gaps up. The volume is irregular. You're really waiting for some news to come out of it for it to spike up. And even me, technically, I can analyze this, but I can't tell you exactly when it's going to move. I can tell you when the price, what I'm seeing on the chart, where the price is going, but I can't tell you exactly when it's going to happen because, especially with these lower liquidity type stocks that have very strange type of movements and history. I mean, look at this period here in 2017. It's just gapping up. It's all over the place. So I would say, what exactly are you trying to get out of it? Can you do the same with a stock in the top 50? And my answer would be yes. There's plenty of stocks in the top 50, even the top 100 as well, that provide volatility that will get you that profit that you're after. Because remember, you're not buying the story, you're buying the future profit that you're going to eke out of the market.
Yeah, I mean, said absolutely perfectly. I think it just highlights again, if you haven't realised on this show, that getting the right timing of the entry is far more important than buying or believing a story, because you may be sitting in there in the red for a lot longer than you may like. But let's get to Hendrik, who's next and writes, I love your channel on YouTube and also got Dale's book. I'm convinced that it is going to change my position for the better. Well, wait till you do the course, mate. But unfortunately, I am stuck in zero like many super funds, and I think I would like to ask you if you guys can give your opinion about the recovery window timeline for it. Now, this one, Janine, I'll get your thoughts. It's very interesting because I find a lot of the consensus out there now with tech is, especially with our market, because it's not performing like the US market, is that I'm waiting for it to recover. But there needs to be a distinction on what tech is booming right now and where this train is going. And for me, it's an AI story. It's not a tech story. In fact, even if you look on the US, a lot of the software companies out in the US are being slaughtered. They're not performing at all because of the power of what AI is doing to supersede. And so when you look at a stock like Xero Software, it's in the area of tech that I think is being hurt by the area of growth in tech. I just wanted to say that because it's not all one board tech to say, well, the US AI companies are going through the roof, I'm going to buy these cheap Aussie ones. That's just my 2 cents.
Yeah, that's a really good bit of information to share.
Yeah.
Thanks for that. All right, now if we look at the chart, we can see there that Xero has come back to the angle of that line. If it had come back, look, I really like it, so don't get me wrong in terms of the support level. And there's a possibility, my friend, that it could turn around at these levels. We don't know yet because it's still making lower lows. And remember how we looked at Ramsey and how it had actually been testing the lows a few times? This has actually done that 1, 2, 3, we can see that there. But we actually need to see it have a bit of momentum and some positive buying action. And so far we've really seen lackluster buying in this stock, some really strong buying and then a pullback to test that low. And that's not there yet. So it's really too early. And the risk for this stock right now is, I'm sorry to say, but there's still a risk that it could head down below $50. So, if it turns south and it trades back below this low here in June, then that's what I think is more likely to happen. If it continues to rise and trades above these two highs here, then fortune favours the brave.
And if it starts to rise up from here, were you thinking upside target?
Upside target's pretty good once it gets going. So if just a really rough rule across the page, not precise measurements or anything, but I think somewhere up around this $100 mark, just a bit over $100 is a realistic figure for Xero.
Yeah, awesome. All right, now time for our hot stock tip for the week. Pedro, you're on.
All right, the hot stock for this week is Life360, ticker code 360. Now, the company hasn't made any major announcements recently, but it has confirmed that it will release its Q2 2026 results in August, which investors will be watching closely. Management has already upgraded its full year 2026 guidance, now expecting revenue of between $650 million USD and $655 million USD, along with $130 million to $140 million USD adjusted EBITDA. Analysts are also expecting another strong quarter driven by continued growth in premium subscriptions and advertising revenue. So with all that said, let's get into the chart and see what the technicals are telling us. And this has really shot off recently. Let's start on the weekly chart here because it really paints a picture of what's happening. I think that people are front loading this since we are expecting that forward growth of still that consistent 30 to 40% growth year on year. I think that in lieu of that announcement, investors are jumping in early because they're thinking, well, this is going to be a positive announcement. Now that does come with dangers because if it isn't, they do miss guidance by a little bit coming in August. So I'll put actually put a marker around August when it's going to be announced. So this is a marker here. We could see something like a rise into that period, and then you might get sold off on news. It might come back to fill that gap. So that's the risk that could be happening, or it could actually just keep on moving up if that news definitely does meet that guidance. But for the moment, I've put that momentum down, that downtrend, and it's crossed above it. We've got volume coming in. We've got that that front-loaded announcement coming in. We've got that horizontal kind of support level here at around that $17.50, and it has crossed above another resistance level, which is at $25. So I think that everything is lining up for Life 360 to have a nice short to medium term move. At least we've seen some gaps here around $34, and also another gap around close around $40. So I'll just put them out for you guys so that you can see. So around that $40 and also around that $34. So they are probably my targets here as we move into that reporting season there, that reporting date. And then after that, well, let's see what the report holds. But for now, this is looking very bullish and a nice opportunity to ride that next wave up.